A very good afternoon to you, Kimathi. Now looking at the markets, up about 1/3% in today's trading session. Talk us through some of the major drivers in today's session.
A very good afternoon to you, Mashudu and Samantha. The market really has picked up over the past 2 days, and today we are quite happy to see that continued upsurge in terms of the NSE index. The main players on the day really are the stocks that I would like to call the usual suspects, the Safaricoms and the like. So really not too much particular activity on any of the unusual stocks, but we are all just happy to have the NSE continue with this bullish move it's been having over the past 2 weeks or so.
A stock like Uchumi supermarkets under pressure in today's trading session. It was trading above 19 shillings, falling back by 6.57%. Your thoughts on the stock and the kind of results that we can see coming through for the full year?
Yes, Uchumi really is a stock that has been the darling of the market. It's been the best performing stock year to date, and we really are expecting very, very positive and very strong earnings from Uchumi. Yesterday it closed at a relisting high, so over the past 2 years that's the highest price it's closed at, 1980. Unfortunately today there was some pullback on the stock's price, and one of the reasons is that general concern as to how high this particular stock can go, and if the actual earnings will be commensurate with these very high expectations. But in my view, I think Uchumi is really going to perform very well. We've seen them expanding, we've seen them really improve their stock taking, we've seen them go out and increase new services and really redesigning a lot of their stores. So Uchumi really is a counter and a company that is really good, and I would continue putting my money in it at this point in time.
Let's move on to the banking sector. We had Citigroup releasing a report suggesting that Equity Bank needs to focus on delivering on its East African expansion strategy before going Pan-African. What do you make of the statement? Is this right? What do you think Equity should be doing right now?
Yes, indeed. Actually, I do concur with that view from Citigroup, that Equity Bank at this point is better off consolidating all its gains. And actually, I have been speaking with a few people at the company, and really that is the strategy that is out in public, that this new strategic position is really to consolidate all the gains that the Equity Group has been making, not only in Kenya, but across the East African region, before it can go out and try to expand further afield across sub-Saharan Africa and later onwards into West Africa. But one of the issues really that the Citigroup report was pointing out was some concerns of increased capital raising, whereby they think that should Equity Bank come out and try and raise more capital in accordance with the Basel requirements, then the existing shareholders may not be in a particularly sweet spot, and some dilution may occur. But all in all, Equity Group continues to do very well. They are very aggressive. They are recently trying to revamp their investment banking unit. And with all the activity happening in the capital markets, Equity Group will be a force to reckon with.
Looking at another bank that's also going out for some capital raising is NIC. Its rights issue results were released in yesterday's trading session. What did you make of those rights issue results? Were they expected?
Yes, they were expected in my books, but actually they kind of exceeded my expectation in terms of the very strong uptake from the investment community. The company was looking for about 2 billion shillings. They got offers for up to about 7 billion. And the feeling is that the rights issue was priced at a very substantial discount to the market level at 21. and the market having been playing over the past 9 months or so between 30 and 33 shillings, today is at about 35. The very strong discount really, in my view, left a lot of value on the table as far as the company is concerned. So I think much as those results were very good for the rights issue, I feel that some value was left on the table, and this very high subscription rate really sets a high benchmark for other companies that are continuing to raise capital. In this case, particularly Standard Chartered, which has an ongoing rights issue.
Indeed, Standard Chartered has that ongoing rights issue right now. It's in the third day of trading. You spoke on this stock a little earlier, Safaricom. It is quite active on the market, pretty much a darling of foreign investors. But the CCK report, Telkom report, is showing that Safaricom is actually losing market dominance over there in Kenya.
Yes, that is what the CCK report has to say as of June of this year. Actually, it gave quite a good comparison of Safaricom's and the general market telecom players' market share over the past 3 years. Since 2009, Safaricom has really lost a lot of market share, coming down from about 80% in 2009 to slightly over 65% in June of this year. Now, for the voice calls, that's one issue, but for the increasing mobile internet market, that's where really my concern is with Safaricom, in that we see them reducing their market dominance also in that area. And the real new players are all trying to get a lot of value from not only the voice calls, but also from the internet services. And the new front is the mobile money payments, where we've seen players such as Airtel really come in and even offer free service. So Safaricom's market dominance really under threat here, but the stock really is continuing to shrug that off, and today was up to close at 4 shillings and 10 cents.
Well, that's where we have to leave it. Thank you so much for joining us, Kimathi Ikiao, independent analyst.